All right, here's a problem with trading in a particular way in euro US dollar. So what I did is I looked at the yearly chart, and I was like, okay, let's draw some lines. I saw this, right? And I was fairly confident that it would respect this level of resistance, and that after that it would essentially move back down. So the problem with this reasoning is that especially when the markets are volatile and strong, resistance can be swept out rather easily. If you look at this in the past, here you see a level of resistance that was just broken out of a little bit and then reversed. This was a level of resistance where you see that it went up back into range and then broke out of it without any signs of stopping. Same thing here, you'd say, well, this is a newly established level of resistance now, right? Instead of support. Well, in this case, you can see that there is one slight move here. So you can see the concept exists, right? You can see that usually there's some sort of response to it, but it's not that it won't break through. It just breaks right through and doesn't care about your feelings, about what your ideas are, right? So support and resistance, just a little indicator that something might go different from the usual direction, right? Same thing here, like you can see that this level of resistance, is well respected. But that here as well, right? You can see that it's still respecting that. But after this, there's a super, super, super strong move, and it just breaks right through the gates, right? It plays right through. Okay, so same thing here, right? It respects it a few times and then just breaks right through. So there's some level of significance to resistance, but it's not a great pattern. It's not 100%. It's not even 80% probably. It's lower than that, right? So if you want to, can you trade with that? Yes, but it wasn't really a strategy that I defined very well. It was just like, oh, this is obviously going to bounce, right? Just bought it, like I shorted it like here. I could have taken profits when it was showing signs of weakening, right? If we look at this on the monthly, right? Honestly, if you look at the yearly, okay, look at the yearly again. Is this going to not break through here? Ask yourself that question. Look at the maximum time frame. Is this a significant level of resistance? Well, it's significant, but it doesn't mean it can't break through it. Like, look what it did over here. There's no signs that it slowed down here because it, was reaching past this past price point. Peter Piper picked a pack of pickled peppers. You can see eventually it did break down near a level of support. But just ask yourself, how many levels of support are there? I mean, there's one over here. And you could say there's one over here. And yeah, sure, within this range, it would, if it would break down in here, you could just say, well, it was just slightly breaking through support and resistance. They're just so close that you can always mention the concept. So here it's actually very tight, right? It matches like perfectly. And you can see here, some of these levels have been hit many, 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 many times, right? You can see here as well. One of these levels is like this, right? And there's not a lot of reversals that are like straight in the middle. But honestly, this is like filling the gaps, right? It's a filling the gaps argument. Whenever there's a lot of gaps, you just fill in the lines there, and then there's more gaps. And honestly, it doesn't make a whole lot of sense. Then you see in the larger time frame, what you're speculating here is just kids play, right? So that just shows you the importance of using different time charts and understanding the context of an indicator like support and resistance. Because I bet way too much on this, honestly, and I didn't define my strategy well. I didn't define my risk very well. I screwed up the orders, which I hopefully won't do very easily again. And overall, it's just not, it wasn't really a good pattern. So you got to understand the context of the times and of the sort of signal that you're trading, right? Same thing with RSI. Strong moves, RSI tends not to be respected very well. Slightly weaker, more consolidated stocks might respect it more. You have to understand the context behind that. All right. So that's it for this one. Don't screw up your trades like that. Also, I liquidated my position. Biggest thing with that is if you find yourself stuck in a trade, and even here, would I care if it does this now, right? Looking back on this yearly chart, look at this, right? Would I care if it drops back like that? No, because I wouldn't be able to make any sort of significance from that relative to what happens if it just goes up to here, right? Boom. If it did this, would that be strange to me? No. And would I be able to lose 2K of my account, like 2K? That's a lot of money. Like, why? Because Euro-US dollar made a little up move. Like, Workhorse has 2K in it, or 4K even. But that's a company with a patent and with stakeholding in a truck, electric vehicle truck company, and with their own facility from General Motors. Like, that's a completely different magnitude of information, of trust, of willingness to bet and lose money, right? So make sure you understand the context behind your trades. All right. That's it for this one. See you in the next one.